Well, the markets are open. Let's take a peek, shall we? Let's take a look at this corn market here first and see how we're opening up. As we have been talking about, it's our first full trading week of 2020. Here we go with the corn on the March contract. Well, we're down a half cent at 3.86 right now. Kind of similar to what we had when we finished up on that overnight trade early this morning. If you look at how we're trading in the soybeans, we have the March contract now trading 2.5 higher at 9.44 this morning. So a little bit of a firmer tone all of a sudden in the soybeans. Well, what about the wheat? Which way are they going to go here today on a Monday? We currently have the March contract on the Chicago wheat up 1.5 lower. We're at 5.53 per bushel. And on the Kansas City market, we have that March contract now trading 1 3/4 lower at 4.73 1/4. Minneapolis March is down just 1 tick, 1/4 cent lower at 5.47 1/4. Dewey Strickler of AgWatch Market Advisors is joining us now. He is in Franklin, Kentucky, and we have a lot to take a look at here this week when it comes to the trade. Do you think that ahead of the signing, supposedly, of the Phase 1 trade deal with China, that these markets are going to do much from where they are right now?
Probably not. I do think that your soybeans and your wheat have put a top in here. We have high expectations here in soybeans as far as some additional sales to China. I don't know whether that will really happen or not. Only thing we really know is that they're going to sign something on the 15th, but what they're going to sign, we still don't know the details about. So you got a cloud regarding that.
Now, hasn't it been true that we really haven't seen much in the way of any booking of U.S. ag exports over the last few weeks when you look at the weekly report? And some are wondering if maybe they were kind of, as they say, keeping their powder dry so that they can get full credit for it after the signing of that deal, and then they may come in and try and get caught up on things here for a little bit. What do you think?
I think that's typically true. However, when you look at soybeans, marlin, they historically exports peak about anywhere first, second, third week of November, and they generally decline the pace of shipments anywhere from 60 to 80% going into the end of the marketing year. Well, our pace of shipments peaked here the third week of November, and they are moving lower here. We haven't seen anything out of China here. So China may have bought all the beans they intend to buy here for at least for a while. We probably won't know much until we see something out of the signing of the trade agreement, and we may not know a whole lot then.
When you look at this wheat market, we are seeing a little bit of a softer tone here this morning. Do you look at this as more of a technical correction? Especially when you look at that Chicago wheat market here?
Well, yes, I do look at technical correction. Also, I look at the fact that Iraq voted over the weekend to expel U.S. forces from their border, and President Trump is threatening sanctions. You have to keep in mind that Iraq has been a large buyer of U.S. wheat. Also, that said, we're still looking at hefty stocks of global wheat. So you got the technicals and fundamentals are really pretty well in line that we should see wheat back off here some.
Okay, Dewey, we'll come back in a moment, and we will take a look at how we're opening up in our cattle and our hog market on this full trading week. We're talking with Dewey Strickler, and we'll return in just a moment. Let's take a look at our livestock summary from Friday to see how the market was setting the stage for today's action. And in the cash cattle trade out in the plains last week, well, we finished, as we mentioned earlier, roughly about $2 higher than what we had the previous week. We had a high on Friday of about 124 per hundredweight. Did have some that brought 123 for some heifers in Kansas on Friday. Dress basis sales, well, they were anywhere from $197 all the way up to $200 per hundredweight. Nebraska had some of those $200 cattle, so did Iowa for that regard. Cash live hogs around the country were bringing 133 per hundredweight. We had the carcass basis hogs around the nation averaging out just 2 cents higher, but we did have a higher trend as we wrapped up the week. Let's take a look at how we're opening up here in our trade this morning, shall we? Let's go ahead and go to the live cattle here first. And on the live cattle futures, we have February 43 higher. We're at 125.15. All the nearbys are firmer than the deferreds are. Let's take a look at how we're opening up feeder cattle this morning. Right now, you have the March contract 35 cents higher at 143.03 per hundredweight. And generally, everything is at least 30 higher. The nearby January is up 78 cents right now. On the lean hogs, a lot of interest in this market too. And we have the February down a dime at 68.45, April down 30 at 74.85. So let's go back to Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. And Dewey, as you look at the open here this morning, not running away in either direction, what do you think?
Well, first of all, when you look at the cattle market, it is impressive that cash did trade about $2 higher here last week, but your cutout values were down. And you've got some rising production, which I think is going to make it very difficult for cattle to go up and to make some new highs here. Now, on the hog market, we do have a record supply, and we do have a declining production, but your cutout was down last week. We did get up a little bit higher last week than I thought that we would, but I've said a couple of weeks ago that I could see the hogs going down and setting a new low here below this 65.40, and I still think that is possible here. So that's my take on the meats.
When we look at our wholesale beef trade last week, I wanted to take a quick look at this. For Friday afternoon on the update for the beef cutout values, we had the choice cuts going higher again by 24 cents. We had select cuts higher by $2.76. So the last half of last week, we definitely had a firmer tone there. The spread only $3.10 now. When you look at that potential influence on the futures, is that going to be enough to hold it up here this week?
I don't know that it's going to do so here. You know, like I said, we had the cash higher, but your cutout is down, and we are looking here with the last three cattle on feed reports. We're looking at higher placements. So we have got more cows coming here just around the corner. Okay.
Well, Dewey, always good to visit with you, and thank you for talking with us here as we kick off our, as you mentioned, the first full trading week of 2020. So we're now underway, and Dewey Strickler happens to be from Franklin, Kentucky with AgWatch Market Advisors. So kind of a timid start, Janet, on the livestock side, but a firmer tone here on the cattle.
All right.
We'll see.
Thanks for kicking things off for us.
You bet.